How would you like to learn some simple but very powerful timing factors for any market in any time frame? That's what we're going to look at today. We're going to look at some current market positions and why next week there's some significant time factors coming into play for most of the financial markets. So whether you're interested in the stock indexes or the precious metals like gold or silver or the GDX or the dollar or the euro, all three of those markets we'll look at today, and we'll look at the major time factors that are coming into play next week that may result in some fairly significant reversals. Well, I'm Robert Miner with Dynamic Traders Group, and this is the video that we do every week or two for our YouTube followers and our Twitter subscribers so you can get an idea of the kind of information and analysis, trade recommendations, trade strategies that we give every week, 3 times a week actually, to our DT Report subscribers and the type of analysis that you can do with our DT software. So I try to make all of these educational videos apply to current markets right up to the date of recording the video, so you have some information to use in the next few days to develop a specific trading plan. If you like what you learn, be sure and subscribe to our channel and tell your friends about it. Also hit that like button. We'd really appreciate it to help us get the word out. Okay, let's get started. We'll start with the stock indexes. I'll show you some time factors coming up next week, and then we'll also take a look at the dollar and the euro and gold because they're all in very interesting positions, particularly related to timing. Okay, let's get started. Well, this is the SPX weekly data. In the past week or two, we've had a couple setups for the SPX that indicated that it was at or near a position to complete a weekly high, got stopped out of those setups with just a really small loss. So I kind of call it probing when we're in the position to have a higher time frame reversal. So what I want to show you this week is that we've now reached the extreme probable for that weekly high, which may be much more than just a weekly high in the SPX. So let's take a look at where we're at timing-wise, and that's what's important. Up along the top, I've marked off what we call weekly highs. Now, some of those highs just resulted in the market going sideways. Some of them were a high, and then the market continued lower for several weeks. But the point is that each one of these is, when we reach that weekly high, is we wouldn't want to be looking for long trades. We'd want to be prepared either for short trades or at least to avoid the market until the weekly low and bullish reversal was made. So since the January high, we go all the way back to the beginning of this year's bear trend. And so every 3 to 5 weeks, we have what we call a weekly high. Now, that's a fairly wide spread. All of them, but about 3 are on 4 weeks. And only one of them is 5 weeks. And this is the key piece of information to have right now, is that this past week, this is data up through Friday, December 2nd. These are weekly bars. Up through the week ending December 2nd, that was week number 4 from the prior, what we call a weekly high. Next week, the week beginning December 5th, that's week number 5. And so that's the extreme time we'd anticipate the SPX and the other stock indexes to make a weekly high. Now, is it just going to be a week sideways, or is it going to be several weeks or several months down? Well, we have to look at the time factors in relation to the other technical factors, the pattern factor, the dual time frame momentum factor, the price factor, and more. So next week, the week ending December 9th, should complete a weekly high, and that's really significant to be alert to, particularly. Let's go all the way down to the bottom. These are our weekly momentum cycles. And as of last week, the weekly momentum had been dual look back overbought. That's really significant because typically when a market is 4 bars dual look back overbought, next week will be the 4th weekly bar, no matter what time frame you're looking at, whether it's 60-minute or weekly, is that you're near the extreme of when a reversal in price will be made. So that means more than likely, based on just years of history, next week is bar number 4 being dual look back overbought in our DT oscillator, cycle momentum oscillator, and that would mean that we'd be really alert by next week to complete a weekly high. That's a high that would last several weeks. So the timing factor says a weekly high that could just be sideways to down for a couple of weeks. It's not like a real major time factor, but when you look at it within the perspective of the momentum cycle, which indicates a high that would last 3 to 5 weeks at a minimum, meaning the market would be sideways to down for 3 to 5 weeks. Now we got some real information to work with. There's one other significant weekly time factor that's next week also, and that's what we call the 100% time retracement. And next week would be 100% of the time of this impulsive decline from the August high to the October low. Now this is impulsive decline. Those of you familiar with Elliott wave know that impulse trends are in the direction of the higher time frame trend. So this is significant, and if the reaction against this, if the reversal out of October is a correction, clearly defined correction in at least structural terms, Elliott wave terms, that's really significant because it means when the correction is over, more than likely, the bear trend will continue to a new low. Here's the daily data of the SPX. Let's just look at the daily time factors. Real significant ones here. This top one is the 100% alternate time projection of this little 5-wave advance, the most recent advance from the low that was made last Tuesday. So that comes in on Tuesday, December 6th. A couple days later is a really significant time factor, and that is the low to high. That's on December 8th. A low high time factor is typically the maximum before a reversal, similar to the reversals that were made with these daily reversals that might only be for 5 to 10 days or something, but when it coincides with a weekly, significant weekly time factor, it's a real wake-up call that we have multiple time factors for a higher time frame reversal. Let's go down to this high to high. Real simple. High to high is December 6th. But the preferred count, and just it's very preferred, meaning there is a secondary potential count, but both those counts indicate a weekly high in the next few days, and if it is a correction, it would indicate it would be the extreme and the end of this corrective advance. So just take that information and watch the market next week and see if we see any really significant and well-defined reversal signals that give us a specific trade setup on the short side. So we can short the market, we can use bear ETS with low leverage, and you don't have to take a big position when the reversal comes. But boy, be awake in the stock indexes next week, ideally Monday through Wednesday, the 5th, 6th, or 7th, but at the very latest, the reversal should be made around the 8th, end of the week for sure. Boy, this is, I think, really information that would be really important to you. By the way, I forgot to mention the introduction. The first book I wrote, Dynamic Trading, is being republished after being out of print for over 20 years. And it's the second edition that was, the second edition was from 1997. So once again, it's been out of print since, I don't know, around 2005, 2006 or so. And it hasn't been available other than very expensive used copy. And it's being reprinted, republished exactly like it was in 1997. It's over 500 pages. And it's really got a lot of great information on simplified Elliott wave, on Fibonacci time and price. It's the basis of everything I've done since then. And just about anyone that analyst or trade educator that talks about Fibonacci time and price zones, you know where they learned it from? They learned it from this book 20 to 25 years ago or so. So it's being republished. You can order it. It's a pre-order because it's not going to be shipped until around December 10th or 12th. But if you're interested in this book, it's the original size, 8.5 by 11. It's about 500 pages, really a comprehensive volume, less than $100. Fantastic educational value. So check it out. The link to order it, if you want to pre-order so you get it mailed to you with the first batch, is in the comments section below. Okay, let's get back, take a look at a couple more markets. So I only got a few minutes left, so we can keep it under the 15 minutes for YouTube. So this is gold weekly data. It's the February contract. Here's the key week next week for gold to complete a weekly high. And that is the low to high. That's next week. And again, that is usually the maximum time before, in this case, a weekly high would be made. And look down here at our weekly momentum cycle. Next week will also be the fourth week of being dual look back overbought. That's what this red represents. So we're getting near the extreme for gold to make at least a weekly high. And whether it's going to be a corrective high or a resumption of the bear trend, we need a lot more time to explore that. This is gold daily data. Here's some key time factors in the daily data that all three of them fall on December 6th, Tuesday, next week. It's different time factors, a different market, all falling on the same time targets, weekly and daily, as the stock indexes for gold. It's the same with silver and the GDX. This is the Euro daily data. I only got about a minute left. So all I'm going to do is bring to your attention, we've got weekly and daily time factors also in the Euro. No surprise, if we've got them in gold, we've got them in the stock indexes and the other financial markets, we're probably going to have the same ones or similar ones in the Euro and the dollar. We got a whole bunch of them between next week, December 7th to the 9th. And the key here is several of these are from different degrees, indicating December 9th should be the maximum time before this weekly reversal, in this case a weekly high, is made for the euro. So we got all three of these. We want to be really alert next week. High in the euro, low in the dollar, high in the gold, high in the stock indexes. Nothing is for sure in technical analysis and market analysis and trade strategies, but this is a wake-up call because we have both price factors, we have multiple time frame momentum factors, we have the time factors, all indicating next week has a high probability of being a weekly high. So then it's our trade strategies that identifies if a reversal has probably been made and where we put our stop, and then our reversal confirmation signal that comes after that. Well, that's the type of thing we cover in our DT reports every Monday, Wednesday, and Friday. So if you want to keep up to date on these markets and several others, check out our DT reports at dynamictraders.com. Well, that's it for today, my friends. Please subscribe to this channel if you want to be updated each time I do a video. I do them every week or two. It's not on a real regular schedule, but if you subscribe, you get notified when I put the next one up. I think every one of them is going to be educational for you, as well as alert you to some trade opportunities each time we put them up. And check out my book, Dynamic Trading. More information in the comments below. That's it for today. Robert Miner, over and out. Take care. Be healthy.